Today we're talking about interest-only mortgages and are they something you should be considering? So at the moment, there are around 29% of mortgages, residential mortgages, so the house that you live in, that are interest only. I actually think that's quite a lot considering almost all mortgages from a residential point of view are repayment. So let me break down what are the differences, the pros and cons, and some changes that the government's making to make mortgages and housing more accessible to you. So repayments versus interest only. So let's say you've got a 30-year mortgage. What this means is that over a 30-year period, you are paying an interest on a loan to buy your property and paying it down at the same time. So the way it works is in the first year, you are paying probably about 95% in interest only, 5% in capital repayment. What that means is if you were paying £1,000 a month, £950 of it is paying for the interest on the loan, and then £50 gets paid off. Then as each month goes by, you are paying slightly more and more and more, so that the back end of the loan, you're paying more in repayments than the interest only. What that means is at the end of a 30-year period, you would own your house outright, which is pretty cool, I think. So you own it outright, don't own anything of it, and then you officially own your home. The American dream, or the British dream, I guess, is coming through. Interest only is slightly different. What that means is that you only pay the interest on it. So if somebody gave you a £300,000 loan and they said, I'm going to charge you, to make this easy, 1% a month, you're going to pay £3,000 a month, but that doesn't chip away at the loan. You are only paying an interest only amount. So at the end of the 30 years, you would still owe the money, the £300,000. So you might think that's a terrible thing. Why would I want to do that? Well, there are actually pros and cons of this. So first of all, you don't typically, with a repayment mortgage, ever actually pay it off. Most people have mortgages and then they remortgage through time. What this means is after about 5 years, a lot of people would get a new mortgage on the property because it's gone up in value, and then they'll get a new loan for 30 years again, or whatever time period. And then the problem with doing that is you're only really ever paying a majority of the interest anyway. And really what we're benefiting from is the fact the value of the property has gone up so significantly over time. So the only real benefit you get from capital repayment is kind of diminished. So interest only is paying the interest only on the loan. So let's talk about the downsides. Well, the downsides are fairly obvious, that you're not actually chipping away on the loan. So people go, you don't own your property, the bank owns your property. No, that's not strictly true. But what does happen is when somebody loans against your property, they have something called a first charge. A first charge means that if you don't pay them, they can take the property away from you. So technically, by doing interest only, there's more risk on the property because the loan size is up. And so if the property prices plummet and they go down, you could be in something called negative equity. What that means is the loan on the property is more than the value of a property. But just thinking about that for a while, who is it higher risk to? Because a lot of people think it's higher risk to you, but that's just not the case. If you end up purchasing a property, say for 10%, and you get 90% from the bank, then the risk is on the bank for 90% of the property. So if it does go into negative equity, which can happen, by the way, although it is very unlikely through history, the risk is on the bank because suddenly it's them that has put more money into the property than the property is worth rather than yourself. But the downside is you're not really chipping away on this loan. Is that a bad thing? Well, depends how you're looking at it. But because we've got something called inflation, it actually works in our benefit. So let's go to the pros of interest only. The obvious pro of going interest only is lower payments on a monthly basis. And I don't know about you, but I have been feeling the squeeze this year. I think everyone has, because of cost of utilities going up, inflation being crazy, which means prices are shooting up left, right, and center. The fuel prices, obviously we've had lockdowns and a lot of other things going on. And so it's nice with most of us Our house payment is the single biggest payment that we have to make on a monthly basis. So knowing that that can come down is a real benefit for us. So capital repayment isn't actually the biggest thing that deteriorates the loan. There's two real ways. Number one is capital growth. And capital growth is really simple because in the UK specifically, there is way more demand for the available property stock. Right now at the time of filming, there's around a 1 million unit housing shortage, i.e. there's a million people looking to buy or rent a property that doesn't currently exist. And we have a certain stock threshold in the UK that we have to develop on a yearly basis in order to keep up with the supply versus demand, and we haven't hit it for around 7 years in a row. And so that demand versus supply problem is becoming bigger and bigger, and the only way of ever solving that is if the government suddenly really helps developers develop a load more units, which is very unlikely to happen. And so unfortunately, prices fairly consistently will carry on going up through time. That is a benefit to you if you own your property and not a benefit to you if you don't own any property. Number two is inflation. I know inflation sucks, right? It is shit. Well, no, not really. It depends on what side of the fence you're on. If you are a property owner and you've got debt, it is a good thing. And the reason for this is inflation is the erosion of the value of money. Let me put it simply. If you have a pound today, in a year's time, it is worth less than that pound. So that's really confusing for people because it's like, but it's still a pound. A pound is a pound, right? Think about it this way. If you could buy something for a pound today and inflation is 10%, in a year's time, to buy that same thing would cost you £1.10. I always use the example of a Freddo bar. I never really remember times where they were 5 pence, but I do remember when they were like 15 or 20 pence, and now they're 70 or 80 pence. And that is through inflation. So it costs me more money to buy a Freddo bar. And then apply that to other things. A pack of Pringles, maybe your weekly shop, your rent, your purchase prices of properties, all of that. And so if that is true, that the value of money is eroding, the same is true on debt. So if a bank or a lender has given you 300,000 and inflation is 10%, the value of that money is getting compressed through time. So in 30 years' time, you still owe that 300,000, but 300,000 means something very, very different compared to 300,000 today. I think the key benefit that we need to look at with this is lower monthly payments. And just because something is interest only doesn't mean you can't pay down your mortgage if you choose to do so. For me personally, this is not financial advice, by the way. I would prefer to have interest-only mortgages on everything that I do and then choose to chip away at it. If I need more income, for example, to fix up a part of the property, then I've got more in my pocket rather than the bank's pocket, and I can choose to do so. Whereas if I've got some surplus money and I want to use that to chip down the loan, you can actually pay down up to 10% of your loan on a yearly basis without paying any penalties whatsoever. And so you can actually speed down the process of paying down the loan if you choose to do so. So my personal opinion is, especially with inflation being so high, I want interest-only mortgages, and then I would use my money as and where I choose to do so. But really, it is a personal choice, and I just want to be really clear. I am not qualified to give financial advice. This is just my opinion. So let me know what you think in the comments. Interest only or repayment? It is just an opinion. If you are repayment and you disagree with me, no problem at all. I'd love to hear from you. Put in the comments why you think repayment's better. And if you are interest only, let me know in the comments of why you think interest only is the best. Now, here's the trick, is how can you get access to the best rates out there? Because I think that's a big thing right now. With interest rates going up, to fight the inflation, we need to get access to the best deals. Now, you can talk to specialist mortgage brokers and pay £500 upwards, or you can do what I've been doing this year and using Lendlord. Lendlord is really, it's for property investors, but it's for anyone that wants to be smarter with the properties they own or they are going to own. And right now it's completely free, by the way. There is a premium version, and if you use the link in the comments, I'll pin it to the top. You can get the premium version where it's access to everything for free for 3 months, which I think is absolutely amazing. But genuinely, even checking out the free stuff on there, but specifically what you should do is go on there now, pause the video, click on it, set up your account whilst I'm talking. It's really quick and easy. It's completely free, but you can get access to the best financial products in the world right now if you go on there, and it doesn't cost you a penny upfront at all. That's how they make their money. Obviously, if you do see it and you're like, wow, this is a really good rate, it's better than anything I've seen elsewhere, that's how they'll make their money, because they'll get paid a proc fee or paid by the lender, okay? But right now, the actual platform is completely free. And the cool thing is, if you have got an existing portfolio, you can put it on there as well, and it can actually see when your mortgages are coming up and then put a product in front of you that they think will be best to help you pay less for the properties that you've got right now. So the truth is, the government right now is trying to make it as accessible as possible, and there is talk of making, number one, 40-year mortgage terms, which is absolutely amazing. You might think that's crazy, by the way. In other countries, they have generational mortgages, i.e. you can get a mortgage in certain countries that are across 2 lifespans. So you pay half of it and your kids pay half of it. And this is a really great way to make it cheaper to own property with the values going up so much. And the truth is, property prices are going to become unaffordable for majority of people, and it is going to become a luxury in the future. And it's a luxury already, but it's going to become more of a luxury. You may have heard this term, you'll own nothing and be happy about it, or something like that. And that is true. I genuinely think we've probably got 10 to 15 years where owning a property is an opportunity for the mass. I think a majority of the population in 15 years will be renting. And so it's the decisions that you make today that's going to dictate whether you are a lifetime renter, and not just you. If you're going to have kids, it will be you set the tone today on if your whole family legacy is going to be a family of renters, or your entire legacy is going to be a legacy of homeowners. And I really believe it's the decisions that you make today that's going to make that happen. So if you want access to that, go on the link that I've put in the description. It's completely free, and if you use that link in particular, you'll get 90 days of premium for free as a gift for being a subscriber on this channel. Hopefully, Lendlord can be as valuable to you as it has been to me. And by the way, the reason I recommend it is I actually use Lendlord on a continuous basis. If you've been watching this channel for a while, you'll see I do loads of videos about my own portfolio within Lendlord, and I know they are the best for getting you access to the best deals out there. I hope this video has been valuable, and hopefully I've shared my opinion in the right way. If you have got value, make sure to hit the like. Of course, if you aren't subscribed already and you want to find out about personal finance and property investing in general, then you are in the right place. Just tap that subscribe button and the notification bell, and I hope you're looking forward to the next video.